Hi guys and girls. So it is Saturday the 5th of June 2021. I'm going to have a look at the markets. What I'm also going to do is I'm going to categorize all my videos into either trader mindset, which is trader psychology. This will be trader analysis. Then there'll be trader techniques, which is obviously technical analysis, and then trader tools, which will be platforms or indicators or things like that. So there'll be sub brands, so to speak. So this week what I'm having a look at, there's actually quite a few, so the video is probably going to run a little bit longer, but let's kick off. Basically what I'm going to do is have a look at the US dollar index, and so basically we have an uptrend on the daily. It's coming back down to test this $90 level. So what I'm looking for here is this Monday or Tuesday to see it form a bullish candle, potentially to climb higher. A lot of this behavior is to do with the bigger picture, that range bound behavior that we see. And if you're a currency trader and that's all you trade, you would have been having a really rough time of it, I would say, the last couple of weeks. And it doesn't look like it's going to get any better. I mean, there's been a couple of opportunities on the yen crosses, but I'll get into that a bit more detail. So just basically, here is part of the issue, is that the dollar here is struggling with this $90 level as well as the 89 level. If it breaks through that, heads down towards 87, that'll be the next level it hits. And right now it's just kind of wobbling around this area. And so until it actually decides to either just go back in towards the top of the range, so we'll get it, in that case, we'd get a strengthening of the US dollar, or alternatively, it breaks out of that range and we get a weakening US dollar. Until we get that, there's just going to be this continuous battle. So this week I am actually prepared. We have a high low, we have an uptrend on the daily, higher high. I am prepared actually for a move up to 91. Just watching these lows as well, starting to come in here, but a little bit of bullish divergence. The implication is, yeah, there is a real possibility the dollar is going to strengthen here. It would make sense within the range, so I'm going to be prepared for that. The chart that shows that a lot is actually the dollar Swissy. I'll get to that in a moment. Looking here at euro dollar, really battling with that level of resistance, unable to get through it, which is interesting because on the weekly chart, it actually really did have, in my mind, I still feel, in my opinion, that it had a good opportunity to go to 1.23. Okay, so fine, whatever, so be it. It's not really going to make that, so there is a possibility it's going to hit a little bit low. I'll keep an eye on that. Sterling also battling here. So this is not an accident. The US dollar is effectively kind of the biggest kind of, right now, that is really the biggest deciding factor, and so it's battling a little bit with those key levels. It's not an accident that we're seeing it in all the majors. We look here at Aussie dollar, US dollar. So this is the side of it. The weekly chart gives a lot of some good explanation as to what's going on there. It's largely range bound. It's a mess. It's untradeable. It does look as though it wants to make another run to the upside, which hints at dollar weakness and Aussie dollar strength. But overall, on the euro and GBP, potentially here, although we closed higher on Friday, which shows a bit of a bullish finish. Overall, there is no prevailing trend right now. This is a problem because without a prevailing trend, it's tricky for traders to determine what to expect for the next week. We're really going to have to play it a little bit sort of day by day. And certainly here, Kiwi dollar, US dollar is range bound on the daily. Okay, so until we get out of that range above and below, it's going to be very messy. And there's a lot, I've highlighted them in orange. There's a lot of them at the moment, which is to signify, I beg your pardon, is to signal how many markets are range bound at the moment and why, like right now, currency markets generally, most of the charts are just not tradable. So dollar yen. Dollar yen does its own thing. It's climbing to the upside. It's okay, even though we've had a stronger US dollar the last week, it kind of came back down. I'll have a look at that. Again, it's slipping to the upside, but that's to do with the Bank of Japan's central bank policies. That's their thing. Then have a look at dollar Swissy. So dollar Swissy started this uptrend on a daily. It's pulled back down to the 0.9 level to test that for support. The weekly chart not showing much, and potentially a little bit of an indecision candle here. So this is something I might have a look at. If there is a bullish candle that's produced on Monday, be looking for some trades to the upside. But again, it feels very much like it's being forced, like you're having to squeeze a trade out of the markets rather than it providing a really high probability setup. Then having a look at dollar CAD. So this is very cool. So dollar CAD has been a beautiful trend over the last year. It's slowing down, it's putting the brakes on, and actually what's happening here, you can see strong bullish divergence here. This is signaling that there's a high probability of it potentially turning around maybe this week and heading back up a little bit higher. So there might, at this point, because it's very much overextended, on the monthly and is also at the bottom of kind of its own monthly range, I really like this as a potential buying opportunity if it can, when it changes its trend. So that weekly chart is also very nice. There might be short-term opportunities this week up to 1.2285, maybe 1.3, and then up towards 1.25. Okay, so there's some opportunities from up to this level of band of resistance, and then beyond that up to the next level up there at 1.25. That I really like. So that's part of the reason that is on my watch list here. That's why, not just that it happens to be one of the majors, but I quite like the look of that. But what I would have to see here is I'd have to see it actually break these previous highs. So in other words, break outside of this band. Okay, let's kind of mark this little bit of a range, break up here, potentially either just break straight out and head up, or even better would be to see it break out, retest this, and then work its way up. That would be great. But in a situation like that, I'd probably have to do that on the 4-hour time frame. Euro Swissy, actually looking like it might be preparing for a bearish breakout. Okay, down from 1.0930 down to 1.0875. And so that is something I'm having a look at here. A little bit bullish and flat, bullish/flat on the indicators. But Euro Swissy is a move to the downside. That is on my watch list. Euro Aussie pulling back down to 156.23. Okay, so I am noting on the monthly a bearish candle there, hinting at the fact that this could be a swing, and therefore this could actually resume its longer term downtrend. So what I don't really want to see is see it just fall right through this level down towards here. I want to see it find strong support this week on 156.23. Okay, so then moving on to Pound Aussie. So Euro Aussie, Pound Aussie. Okay, so yes, there's a possibility it's going to head down. Pound Aussie as well. This is interesting behavior on price action. There is a breakout of a level of resistance. Move up, retest it, then another move up, then immediately a pullback, and another move up and getting knocked back again. So just repeated failures to go higher, which indicates strong resistance up here. It's also got that visible on the weekly, and on the monthly it's also close to a key level. So a lot of this potentially for me is a problem. Looking for long opportunities, I'm kind of now going to walk away from this, not convinced that there's anything really decent there. And actually that also brings me on to the yen pairs. So they've been profitable. Certainly the yen crosses have been profitable. The last couple of months have been really, really good. They've been next to dollar CAD. They've been the best ones. Now, here's my issue. Normally, I would be looking for bullish support, and I think we're likely to get a signal here that buyers are going to step in. The problem is, and the weekly looks fine, but it's also potentially overdue for a correction down towards 131, so that's going to head down a little bit lower. And that monthly is really overdue for a correction to the downside. So this is my concern, is that it might set up with a bullish candle. I had a couple of losing trades this week where I had these setups and then they're just big shifts, which isn't always the case. It doesn't happen very often, but it does happen from time to time. And this could be another example of it. So it pulls back, produces a bullish candle on Monday, and then triggers potentially with an outside candle and then collapses, and then the rest of the week it heads all the way down. And so for now, Euro Yen, Pound Yen, these are very real possibilities. Again, pulling down here. So I am actually in Pound Yen trade at the moment, triggered in on this candle on the high of that, stop loss below this level of this is market structure here, so this kind of resistance support, putting my stop loss below here, but that is a lower high, and therefore the implication is, yes, potentially it's going to turn around. It's got a little bit towards the top of the channel on the weekly, and certainly on the monthly, this could end up being a pullback. So if Euro Yen and GBP Yen do that and they pull down, there's going to be a bigger retracement, could potentially be either a weekly correction or a monthly correction. So that is a bit of a concern. So I don't see opportunities there. Also, again, here's Swiss Yen as well, also in on that, triggered in here, market's going largely sideways. It's not looking good. Okay, these look as though they're potentially about to turn. Still in those trades, stop loss below these lows here. Again, that's a level, market structure level there of resistance and support, and therefore might be okay. So Kiwi Yen. So this is, I think I spoke about this last week. I wanted price to produce a signal here. It's fallen through and produced a bullish candle here. So the idea is, and I think for me, I would rather have my entry above this high and my stop loss below this low if it's going to carry on. Overall, I'm really not liking the look of this. And the funny thing is the daily in isolation looks great. The daily, not a problem. In other words, this nice level of resistance, pulling back to that, but it didn't find support. It actually fell through that level. So I am very, very wary of that. So instead, what I'm going to do is wait on the lower time frames for price to break back up above that level, to test it here again, and then look to carry on. Okay, so for me, that's a safer way to trade that, because the market has to show me more evidence before I commit, and that evidence should be sufficient. Then having a look here at Aussie CAD. Aussie CAD, principally I've been bearish on this a while, but we've now reached the monthly support level. There's a nice little monthly bullish candle coming in here, and this price action is looking increasingly as though it's putting on the brakes. So it does a big move down, another slightly smaller move down, much smaller move down, deeper retracements, and bullish divergence coming in on both these indicators at the bottom. So actually there might well be a change in trend to the upside here. That's a possibility. I'm keeping that in mind. Aussie Kiwi I spoke about last week has been quite messy. I was looking for price to pull back into these areas. There's some, we're now back in that 618 zone, which is support and resistance. This is not a bad area for it to turn, but similar to Kiwi Yen, it's retraced just that little bit higher into this, and it's overall quite a messy chart. That monthly chart is asking for trouble, and that weekly chart looks really nice and bullish, and it's largely range bound. So the only reason I mentioned was if I had got a bearish candle, then it would look nice and I could do that move to the downside. I don't really have that yet, so I'd have to see a break of Friday's candle and then be convinced and feel confident that it's going to hit short. So I'm going to watch it, but it's not the best thing on the watch list. And Kiwi CAD looks very much as though it's hit that monthly support level. Daily, it's got bullish divergence. Actually, it's kind of flat on RSI. MACD is a bit bullish. There is a possibility here this is going to attempt to change direction. Similar here on the monthly, potentially starting as that. So just interesting. Aussie CAD, Aussie Kiwi, Kiwi CAD also potentially looking as though there might be some changes in trends there. So all of that just says all the currencies are just saying caution, caution, caution this week. So I'm not really expecting that's where the money will come from. There might be, and middle of the weeks, the conditions might start to show a little bit of potential, but not expecting much of that. So now moving on to commodities, having a look at gold. So gold has pulled back, nice little healthy correction off a big level, 1900. Produced this big bullish candle. In terms of swing trading, it's not ideal. It's very, very big. This is obviously past my 3-to-1 target on this original trade, which is kind of scary because that goes all the way back to April. So it's taken a while to hit that. Now, here's the thing. The monthly overall, I'm still happy with it, but it is encountering some resistance here. So I'm not going to pretend that there isn't this 1900 level isn't significant. Longer term, I am still bullish on gold, but that doesn't mean that I'm going to trade it just at the moment. So this week, what I'm looking for is to see if price can take another run at that 1900 level, break through it, retest it for support, and carry on. So gold on my watch list for sure. Let's have a look at if, on the other hand, it just falls back down, then no harm, no foul, I won't trade it. But if it does break above that level, I'm going to look for entries. Silver as well, I'd like to see it break up above this. This is a mess here as well, and you can see it on the monthly. If I needed to get past that before it becomes more attractive to me. Now, crude oils. So crude oils have actually these have been the best charts aside from some of the stocks. But commodities versus currencies, commodities have been kicking ass. They're looking really good, and so they have started to break to the upside, looking really good. And not just crude oils, all the oils, heating oils. Gas, other different commodities as well, but let's call it fuel-based commodities have actually all looking really good. So, and I was saying that one of the things I was watching for at this level is if we are over time going to see less and less kind of fossil fuels, or they're going to be dying out, then this is where I'd expect it to turn and head lower. Looks like it's now going to take another run at that 75 level. So that's good. So for me this week, oil is back on my watch list for trading opportunities to the upside. So I'll be looking for retracements on the 4-hour and daily, and looking for buying opportunities as we head up towards 75. Pretty straightforward. So those are my favorites. Any kind of a retest of 70 here on Brent, crude, love it, looking good. Other commodities of interest for me are coffee. So coffee has broken through a significant monthly level on the daily, retraced, and has produced a nice bullish candle. So it's got a really nice bullish structure. Overall, it's broken through, it's had a longer term downtrend, it's found a nice little base here, and it's now started to break to the upside. Okay, it's in a monthly uptrend, it's in a weekly uptrend, and it's now in a daily uptrend and a break and a retest of this. So absolutely, coffee is now on my watch list. I like the look of that, so that's cool. Let's have a look at lean hogs. Overall, a bit gappy, but overall the structure looks really good. I would say it's overextended on the monthly, but daily and weekly looking pretty good to me. And the indicator is now starting to run to the upside there, looking a bit bullish. So not bad. Soybean as well, soybean futures definitely overextended on the monthly, similar to lean hogs, but they're weekly looking really good. Just produced a swing low on the weekly, heading up towards key numbers here at 1650 and 1600. Looks like it's going to take another run at that, so might put that on my watch list in terms of that. Right, so those are a couple of commodities of interest. Now having a look at the global indices, starting off with the Dow. Beautiful, looking good. I'm going to stop kind of going on about this monthly overextension. I'm just going to comment here that we go from larger candles to smaller candles. So in other words, the amount of energy in each candle is definitely decreasing over time. And so, yes, we are approaching 35,000 key level. I suspect we're at a key turning point around that key level, but that daily looks really good. It's broken through resistance, pulled back, retested it. It looks to me as though it's very intent on going up towards 35,000. That weekly looks fine. So again, weekly and daily in isolation look great. Thumbs up. That monthly is overextended and it is starting to slow down. Okay, so it just means trading to the upside with some degree of caution. S&P 500 got its little band of resistance here pushing through. That weekly looks great. Again, that monthly starting to slow down around those key levels. So a break through that level, possible opportunity. Now, NASDAQ, again, also beautiful. Look at the structure here as well. Really nice, bullish, almost bullish. It is a bullish engulfing candle. No, it's not engulfing, I beg your pardon. But really nice retest of support pushing through on that. It's got to get past this level. Overall, this is not a healthy structure. So this implies, certainly on this chart, that, till July, maybe even August, there could be some potential issues on the NASDAQ. And certainly that monthly is not able to get past that point. So if I look at it, if I sum up what I've seen so far in these three charts, they are bullish, but it's possible that in the near future, which is either this week or next week, they're not going to be able to necessarily get past those levels and therefore might start to fail off those levels. So as a trader, it means that I might consider taking some very small positions in the moves up to those key levels and then just watching to see how the market reacts at those levels, whether it really struggles, is a big rejection, or if it actually manages to push through. And if it pushes through with ease, then I can start to look for other opportunities to the upside. Russell 2000, of course, little legend here, is just a mess on the weekly. Basically, that's the biggest reason to stay away from it. But overall, it is really nice and bullish here, and it's battling the same ceiling, and I want to see a breakthrough. But if it doesn't, that tells me a lot. There's nothing tradable there right now anyway. Checking the FTSE, moving away from the US, going across to Europe, to the UK. It's managed really nice break and a retest of that 7,000 levels, produced a swing low on the weekly. That's a good sign. It is just a little bit messy on the daily, but it is more bullish than bearish at this point in time. Nice little break of resistance, retest of that as well, looking good. So signs of it trying to find a base to push higher. DAX looking really good. Look at that. So that's broken just through this nice little band of resistance over here, and also found some support and headed on higher. That weekly looks good. Yeah, overall they look way more bullish than bearish. Let's finish off with the euro. In Europe, let's look at that. So euro stocks also climbing, looking really good. Bullish on those. Let's look at the Nikkei. So the Nikkei is just stalling. It's kind of run out of steam. It's trying to consolidate, but it's not weak. It's not quitting. So that's interesting. Again, that's a good sign. That's a bullish sign. Then having a look at the ASX out of Australia, has broken through 7,200 all-time highs. That's great. Overall, any pullbacks onto this look good. It's had a bit of a consolidation on the weekly. It's got room to run. Okay, so also looks pretty good. Okay, we're passing on from payroll. We've got another major scheduled news. Non-farm, Friday produced some big swings, but overall, nothing aside from the currencies didn't really create any major shift in any of the other markets. Nothing else really. Okay, so now moving on to stocks of interest. I'm going to run through these as quickly as I can. Amazon overall within its own range. Okay, so that's it's treading water at the moment, not really going anywhere. American Express looking really good. Of course, these are overextended on a monthly basis, and at some point, of course, there'll be a correction. But that weekly looks great, really nice and happy and healthy, and daily looks good. So for me, I'm happy to I am just keeping an eye on this, whether we get some divergence in here or not. I'd like to see some pullbacks into these, potentially even pullbacks into, say, 160 for buying opportunities. Apple. So what is worthwhile noting is a series of higher highs on the daily here. All right, Apple is going to attempt to move higher. That weekly, trying to find a base there as well, okay? And that monthly almost producing a bit of a consolidation ahead of a breakout. So that's interesting to me. So Apple is going to attempt to climb higher. Let's see if we can get through this little band of local resistance here. There is something about here. I want to see if we can get through that, but it's going to try. So good. Start that again. I got interrupted. Okay, so Tesla. All right, so Tesla's produced this bullish inside candle. It's a bullish attempt. It's an attempt. It's pulled back down onto the top of this band. This was a minimum correction that was needed. If it needs a bigger one, it'll come down towards 400. But it looks like it's trying to create a base to head higher. Excuse me. So this is what I'm looking for this week, to see if it does indeed break these previous highs, climb a little bit higher. Alternatively, if it actually fails to do that, fails to break those highs and actually immediately comes down, breaks through the 540 level, then it starts to look as though it's going to head down towards 400. So that's really what I'm going to be looking for there. Having a look at ARC, going back to ARC there. This is similar as well, trying to create that base. It's now in an uptrend on the daily. Nice little bullish inside candle as well. We can break higher. We can see that it can start to recover from that point. Again, same thing again, there's that risk of it just kind of fails to do it. So that monthly candle is it's a little bit bullish of a rejection of that 100 level, but it also has produced an inside bearish candle so far, and a weekly bearish candle. So this could indeed actually, if we just break, basically this is the easiest way for me to look at this. If we break the low of last week before we break the high, then the likelihood of it hitting lower is stronger. Conversely, if it immediately sits up here and breaks these highs here, then that means it's going to start to become more bullish in the future. Berkshire Hathaway, thought I would mention this as well. Obviously overextended on the monthly, same old story. You've heard that song from me before. And then the weekly now, but is starting to look good. It's had a nice little swing low heading up towards 300, also a big significant number, and a breakout at this point. Nice little flat level breakout there. A little bit on the bullish side, looks okay, but just thought I would mention that. I thought that was quite interesting. Boeing, I'm following on from last week, so produced this bullish candle. We did break the high, so generally speaking, the implication of that is that it wants to head a little bit higher. So I want to see if that is the case this coming week. Coca-Cola overall looking really good. Okay, so it's between previous highs on the monthly. Okay, so there's a prior high in December, and then we've got all-time sort of highs at around 56. I want to see if it looks good. It's had a good consolidation on the daily. Pullbacks here, looking for this to continue up, and then to see how it acts at those old highs. So Coca-Cola looking good. Costco as well. So Costco is usually one of my favorites. The monthly looking fine. Coming up to these highs over here, 400, big number. Interesting just to see all of them are approaching kind of big numbers or previous highs, and therefore there could be a bit of a problem. It's had a bit of a consolidation and a bullish candle on the weekly. Overall, it looks set for a breakout. There's some bearish divergence here at the bottom, which usually implies a false breakout, a failed breakout. So I want to see how that ultimately plays out. Keep an eye on that. Goldman Sachs made it. So again, that monthly looking overextended. This is kind of what happens when you throw tequila into the punch bowl. That weekly looks great. A little bit of a gap up there. Okay, so overall that looks all right. Indicators are fine. They're bullish. Daily looks good. Pullbacks here again. Pullbacks here. I'm looking for buying opportunities. And the indicators are large, by and large, are bullish. So I'm okay with that. Vanguard. Vanguard looks like that's also set for a breakout. Okay, high lows looking nice and bullish on the indicators. That weekly, really nice swing low. Close up near the top. Starting to show some exhaustion here. These are hanging men, indecision candles, starting to show a bit of that. I want to see if that's going to be a false breakout too, but actually it looks a little bit more bullish. It doesn't mean it won't break out, just not necessarily whether it's safe as a trade or not. Visa, the last one on my list for today, also setting up with a nice little flat level breakout in an uptrend on the daily, looking a little bit more bullish on those indicators. Also a swing low on the weekly off a previous high market structure there, not overextended, that overextended on the monthly. So also very, very nice. Those are ones that I quite like the look of. Now, moving on to cryptos, having another look at Bitcoin. So again, I've marked all these areas with these orange boxes are ranges. Currently looks like it's still stuck within that range. It is still in a range. There's no doubt about it. And so it's not really, this is what I'm looking for here. We've got a low here, a low May, then another one end of May. Then we've got another one right at the end of May. I want to see if we get a higher low here that we could be getting ready for a breakout to the upside, but this doesn't look super strong. This is a great area for it to turn around, but it doesn't look that strong. Okay, so kind of I'm super cautious on it for the moment. We've got a higher low here as well with Ethereum. It's got to get out of its range. It has produced almost what appears to be a bit of a swing low here on the weekly, which was good, that monthly indecision. So we've got conflict between the different time frames, which is longer term investors, medium term investors, and maybe shorter term traders. Okay, giving different signals. And so it's basically one of those just wait and see, because you have to wait for it to tell you what it's going to do. Is it now going to resume as longer term uptrend, or has it got further downside? And right now it actually in itself doesn't actually know. DogeCoin. Okay, so DogeCoin, higher lows, higher highs, daily uptrend, swing low on the weekly, definitely more bullish. So compared to Bitcoin and Ethereum, DogeCoin is relatively speaking stronger, more bullish, but it is battling what is clearly a level of resistance over here. Okay, so that we'll have to see if we can get past that. It could potentially also turn out to be some sort of head and shoulders type structure if it heads lower as well. So again, worthwhile kind of keeping an eye on what does it do this week with these lows. Does it break through these lows and head a little bit lower? Cardano, also you can see largely speaking, there's a swing low on the weekly. Monthly is managing to survive. So it's interesting because Bitcoin, Ethereum have all had some good runs, are not looking super strong, are looking like they need a bit of a breather, but the others are looking as though they're not as tired and like they want to keep going. And the one that had a really good correction, in my opinion, is Neo, all the way back down here. And so therefore, it's in a really good place, in my opinion, for it to be able to recover and start to build up from there. Ripple, looking, I was just highlighting this. So actually last week I highlighted this saying, would we see this head lower? So far it is, but it's still producing higher lows. So what does that mean? And I'm not one for trend lines, not really a big fan of those, but let's actually see if we manage to get it to find some support off that level where it is now, break higher, which could then signal that it's going to just break through that level. So we'll see if that's going to be the case. That's it. So now going on to the bonds, just to Treasuries, looking at the 10-year one, uptrend, pushing higher. A little bit of an uptrend there in the weekly, so starting to see an increase in buying there. Let's look at the Euro bubble, also now looking quite bullish. Definitely found a base there. Potentially now breaks the high of last month's candle. Then I think we're going to see some more buying on that. So that's interesting to see some buying increases on Treasuries. Eurobond as well, potentially going to do that. Okay, so if we to sum up, if we go and look through all the different markets, not a lot going on in currencies, bit of a shift or a bit of treading water for currencies is a better way to put it. Nothing hugely significant coming out of that. The metals still looking bullish at this point in time. Commodities, oil looking nice and bullish. We've got a couple of others, coffee, lean hogs, soybean looking bullish. That's cool. The indices, global indices looking bullish, but a lot of them have big round numbers, potentially highs or resistance levels that they have to get through this week. Some of the stocks also, although they're overextended on the monthly, a lot of them look great on the weekly and the daily. So that doesn't mean that they can't fail. It just means that they think they can succeed. So good. And then cryptos, again, also trying to decide if they're going to resume their longer term uptrends. I don't think they've had enough of a break. I think they need a 2-3 month kind of distribution. They need to just have a bit of a breather, and then they're recharged and ready to resume. So we'll see how that goes. But I'm happy to accept if they do, then they do. And Treasuries showing an increase in interest in Treasuries, which means there might be a slight shift towards buying Treasuries, which could be an indication of that could be related to the stocks. So if the stocks do battle and the indices battle and start to weaken, and we see an increase in Treasuries, that then confirms that there's a shift in money across the board. So I can't say anything else. That's it. That's me wrapping up. I hope you found this interesting, and I look forward to seeing you next week. Thank you.